Welcome back to the Daily Crypto Roundup. Today, we've got a market that looks ready to push higher, a major Solana DeFi rescue package that says a lot about who is gaining power in crypto right now, a warning from Jensen Huang that China may not be nearly as far behind in artificial intelligence as many in the West assume, a wild Solana meme coin story that captures the speculative madness still bubbling under the surface, and a sharp rebound in Polkadot after panic over a bridge exploit started to fade. Taken together, the story today is that risk appetite is still alive, but it is highly selective, highly fragile, and still very dependent on whether traders believe the next narrative is strong enough to carry them through the noise. This episode is sponsored by Kraken. If you've been looking for a reliable platform to buy and trade crypto, Kraken is linked below. And for a limited time, we're giving away 20 XRP to listeners who sign up using our Kraken link in the description. If you want to support the show and enter that giveaway, check out the link below. Now let's get into today's biggest crypto stories. Let's start with Bitcoin, because once again, the market tried to break out. Once again, traders got excited as price moved toward the mid-$70,000 area, and once again, that move failed to stick. Bitcoin slid back below $74,000 after another unsuccessful attempt to break through the $75,000 to $76,000 zone, which has become a major ceiling for this market. That matters because this is now another reminder that recovery rallies are not the same thing as true breakouts. Traders can talk all day about momentum returning, but until Bitcoin can actually clear resistance and hold above it, this market remains in a tug-of-war between optimism and overhead supply. And that failed breakout matters even more because the broader macro backdrop had actually turned more supportive for risk assets. The Nasdaq and the S&P 500 both reached record highs on optimism around possible progress in US-Iran peace talks, while Bitcoin pushed towards $75,000 during that move. In other words, Bitcoin had the kind of environment bulls normally want. Stocks strong, geopolitical stress seemingly easing, and analysts at major firms seeing a tactical entry point. But even with those tailwinds, Bitcoin still could not force a clean move higher. That tells you there is still a layer of sellers using strength to exit, and it suggests the market needs something stronger than general macro relief to really change its structure. That is why today's price action feels more important than it might look at first glance. On the surface, a move from above 75,000 back below 74,000 is just another volatile crypto day. But underneath that, what you are really seeing is the market asking a question it still has not answered. Is this a genuine recovery phase, or just another relief rally inside a broader damaged trend? The $75,000 to $76,000 zone has become the battlefield. Until Bitcoin wins that level decisively, every rally is vulnerable to being sold. Every altcoin bounce is a little less trustworthy, and every bull case starts with the words, "If Bitcoin can finally break out." Now, against that backdrop, one of the biggest industry stories of the day is Drift. Drift has secured a proposed funding package of up to $147.5 million from Tether and partners after suffering an exploit earlier this month that drained more than $270 million in client assets. The deal includes up to $127.5 million from Tether and another $20 million from partners, and Drift plans to relaunch as a USDT-based perpetual futures exchange on Solana, replacing Circle's USDC as its settlement layer. That is a huge story for three reasons. First, it is a rescue. Second, it is a reset. Third, it is a power shift. The rescue angle is obvious. A protocol gets hit, users need to be made whole, confidence collapses, and without outside capital, the platform risks death. But the reset angle is just as important, because Drift is not simply patching the hole and going back to business as usual. It is relaunching around Tether's stablecoin instead of Circle's. That means this is not only a story about recovery after a hack. It is also a story about which stablecoin issuer is willing and able to step in as a lender of last resort when parts of crypto infrastructure break. Tether is not just writing a check here. Tether is turning crisis into influence. And that brings us to the power shift. For years, people talked about stablecoins mainly as settlement tools, dollar wrappers, or liquidity rails. But what stories like this show is that the biggest stablecoin issuers are evolving into something closer to shadow central banks for crypto. They do not just provide the unit of account. They can also become emergency backstops, strategic investors, and ecosystem kingmakers. If Tether can help rescue a major Solana derivatives platform and then install USDT deeper into its core plumbing, that is not just a business transaction. That is market structure changing in real time. It strengthens Tether, weakens Circle's position on that venue, and reinforces the idea that scale and balance sheet strength matter more than branding when the industry is under stress. Now let's widen the lens, because one of the more interesting non-crypto stories tied into today's broader risk conversation came from NVIDIA's Jensen Huang. Huang warned that China has the computing power and infrastructure necessary to rival top US artificial intelligence systems, pointing to what he described as ghost data centers that are empty but fully powered and ready to be mobilized. He said the hardware needed to train frontier models is abundantly available in China and suggested the Chinese government could rapidly concentrate chips if needed. That is a serious warning because it challenges the comfortable Western assumption that export controls and supply constraints automatically guarantee a long US lead. Now the question you might be asking, why does that matter for a crypto roundup? Because crypto does not trade in isolation from the next big technology race. The AI narrative is now deeply embedded in risk markets, semiconductor demand, data center economics, and even the geopolitics that shape capital flows. If investors start believing China can keep pace after all, that affects how people think about NVIDIA, the AI supply chain, US technological dominance, and ultimately the pricing of growth assets. Huang's warning is a reminder that technological competition is not linear, and that hidden capacity can be just as important as visible capacity. Markets love simple stories like America leads and everyone else trails. But the reality may be much messier, and when reality gets messier, volatility usually follows. Back in crypto, we also got one of those stories that perfectly captures why Solana remains such a fascinating and dangerous ecosystem. A Solana trader reportedly turned just $8.50 into $9,928 by buying and staking the meme coin Belief. The report says the trader spent 0.1 Sol to buy 6,636 Belief, then earned 25.06 Sol and 2.9 million Belief in staking rewards, producing what was described as a 1,169x return. That is the kind of story that sounds ridiculous, looks like bait, and yet tells you something real about where speculative energy still lives. The obvious reaction is to laugh, or to call it casino behavior, and to be fair, it is absolutely that. But it is also evidence that the meme coin machine is not dead. It may be quieter than at the absolute peak mania phases, but the appetite for these tiny bet, life-changing outcome stories remains powerful. And psychologically, that matters because these are the stories that drag retail attention back into the market. They create the sense that maybe, just maybe, there is still easy money out there. Of course, for every one of these success stories, there are thousands of people who buy the wrong token too late and lose almost everything. But crypto does not run on averages. It runs on narratives, screenshots, envy, and momentum. And a story like this gives the ecosystem exactly that. It also says something important about Solana itself. Solana has built a reputation as the chain where speed, low fees, aggressive retail speculation, and constant experimentation all collide. That makes it chaotic, but it also makes it culturally relevant in a way some older ecosystems struggle to match. When meme coin fever returns, Solana is often one of the first places it shows up. When traders want to take absurdly small positions on absurdly risky ideas, they want a chain that lets them move quickly and cheaply. Solana fits that role perfectly, and stories like this reinforce it. The upside is energy and attention. The downside is that it pulls the ecosystem even further toward speculation as entertainment. Now speaking of rebounds, Polkadot had one of the sharper moves on the day, rallying more than 10% after the market digested the fallout from a bridge-related exploit. The move suggests that traders saw the earlier sell-off as overdone, or at least believed that the damage was containable enough for the token to bounce. This is one of those classic crypto setups where price collapses on fear, then snaps back once the market decides the event was bad but not fatal. In other words, the panic gets repriced. This is an important distinction because not all exploit-driven sell-offs are the same. Some attacks expose something rotten at the center of a project. Others expose a serious weakness but not necessarily a terminal one. The market seems to be leaning toward the second interpretation with Polkadot today. That does not mean the risks are gone. It does mean traders are making a judgment that the worst-case scenario is no longer the base case. And in crypto, when the market moves from catastrophic thinking back to probabilistic thinking, prices can rebound very quickly. More broadly, the Polkadot move is another reminder that crypto is still a market where narrative timing matters almost as much as fundamentals. If people think an exploit means death, they sell first and ask questions later. If they then decide the exploit was ring-fenced, recoverable, or unlikely to spread, they rush back in just as fast. That creates these violent V-shaped moves that traditional investors often struggle to understand. But in crypto, where liquidity can be patchy and sentiment can swing hard, these overreactions and snapbacks are part of the terrain. So when you pull all of today's stories together, what do they say? First, the macro backdrop is improving, or at least stabilizing enough for risk assets to breathe. That is why stocks are printing records and why Bitcoin had a shot at testing higher levels again. Second, crypto's internal market structure is continuing to shift, with firms like Tether becoming more powerful not just through stablecoin dominance, but through crisis intervention and ecosystem leverage. Third, the speculative engine is still alive, as shown by the belief meme coin story and the continued retail appetite for absurd upside. Fourth, exploit fear remains a major force, but so does rebound trading when the market thinks the worst has passed. And finally, the AI and geopolitical backdrop still matter more than many crypto-native traders would like to admit. If you wanted to sum up the day in one sentence, it would be this: confidence is trying to come back, but conviction still is not fully there. The stock market is acting like peace and growth may still be possible. Bitcoin is acting like it wants to believe that too, but cannot quite commit. Altcoins are bouncing in pockets where traders see either asymmetric upside or temporary dislocation. And underneath it all, the real winners may not be the loudest tokens, but the infrastructure players, the balance sheet providers, and the platforms that can survive chaos long enough to benefit from the next wave. That is all for today's Daily Crypto Roundup. If you enjoyed it, drop your thoughts in the comments, smash like, follow, and we will see you at the top.